Brent crude dropped 1.5% to $110.39 after President Trump announced a suspension of planned military action against Iran. The move came after Gulf nations, including Saudi Arabia, Qatar, and the UAE, urged Washington to delay operations during ongoing diplomatic talks. Despite the decline, oil benchmarks remain elevated with gains exceeding 80% year-to-date and 20% over the last month. The market response shows how geopolitical tensions can quickly translate into price movements. The suspension of military action suggests a temporary pause in hostilities, which may have eased some short-term pressure on oil prices. However, the underlying risks remain, as Trump emphasized that military options are still available if negotiations fail. This highlights the fragile nature of the current situation and the potential for sudden market shifts. The oil price decline reflects investor reassessment of immediate risks, but uncertainty about the long-term outcome of diplomatic efforts continues to weigh on the market. Meanwhile, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Iran's Karg Island export terminal has been inactive for at least 10 days due to U.S. naval operations, adding to the complexity of the situation. The disruption at Karg Island affects Iran's ability to export crude, which could impact global supply chains if it persists. This development adds another layer of uncertainty to the oil market, as traders assess the likelihood of prolonged disruptions. In addition, the U.S. has granted a 30-day extension for sanctions relief on Russian crude currently in transit, which could temporarily stabilize some supply lines. This move may help prevent a sharper price increase in the short term, but it does not resolve the broader geopolitical tensions. The oil price remains sensitive to developments in both the Gulf and Eastern Europe. Market participants are closely watching whether diplomatic efforts with Iran will succeed in reducing tensions or if the situation will escalate further. The oil price is currently at a critical juncture, with both upside and downside risks present. If negotiations fail and hostilities resume, oil prices could rise again, driven by fears of disrupted supply from Iran and potential retaliation. On the other hand, if a lasting agreement is reached, prices could stabilize or even decline further as uncertainty is reduced. The next key signal to watch is whether Trump's military options remain on the table or if a more permanent resolution is. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Reached with Iran. A definitive outcome in the coming days could provide clarity and influence the oil price direction. Until then, traders will remain cautious, and the market will likely continue to reflect geopolitical uncertainties. The oil price remains elevated despite the recent pullback, indicating that underlying supply concerns and geopolitical risks are still priced into the market. This suggests that any new development, whether diplomatic progress or renewed tensions, could trigger another sharp move in oil prices.